This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. 5 years ago, deep in a bear market, a group of traditional finance experts founded BitGet, and they've been building ever since. Now, with 20 million users worldwide, BitGet is committed to helping users trade smarter by providing a secure one-stop crypto investment solution with copy trading, future trading, and spot trading. Your security is their priority, and BitGet has one of the largest protection funds in the industry with US $300 million to cover potential trader losses from unforeseen events that are not due to misconduct from the user or platform. BitGet wants to inspire everyone to embrace Web3, so if you're new to crypto, learn more at the BitGet Academy with free blockchain courses, crypto guides, cryptocurrency trading strategies, and more. Or for the experienced investor, trade smarter with daily access to institutional-grade crypto market intelligence and trends analysis with BitGet Research. I've put links to BitGet Research and the BitGet Academy in the show notes, so get amongst it or simply go to bitget.com. Thank you to BitGet, and now it is on with the show. My guest today is Chris Kline. Chris is the co-founder and chief operating officer at Bitcoin IRA, a crypto IRA platform for investing in crypto with self-directed IRAs. Very interesting. And look, welcome to the show, Chris.
Thanks for having me, Andy. It's a pleasure to be here.
Pleasure to have you here, Chris. Let's do what we do at the beginning of the show. It'd be great, Chris, if you could please introduce yourself. I'd like to hear a little bit of your personal and professional backstory, I suppose, in the lead up to you co-founding Bitcoin IRA.
Yeah, absolutely. Born and raised in the state of Colorado. I moved to California about a decade ago on a one-way ticket in a suitcase and started working in self-directed IRAs. And started early with precious metals, LLCs, different kinds of entities that you wouldn't find at a traditional Fidelity or Charles Schwab. And since then, we had the challenge to build out Bitcoin IRA, which we did in 2016. And since then, I've grown it to vertically integrated trust company, top security, a lot of things we'll get into. Now, as a person, when I came out to California, I fell in love with a beautiful woman, and we got married and had a gorgeous daughter that's now just turned 10 years old this week. And that's pretty much my personal life as I focus there.
I like it. Thank you, Chris. All right. Well, I suppose just maybe to set the background, because you'll be only too well aware, Chris, that obviously it's a fascinating time in the wonderful world of Bitcoin at the moment. Look, it always is, but no more so than now. Obviously, with the recent ETFs halving is approaching, but you've obviously been in this kind of unique space, crossover space, if you like, between retirement accounts effectively and Bitcoin for some time. So, you were very, very early here. It would have been a little bit difficult at the time. So do you want to just, paint the story of why you wanted to cross or straddle this intersection of Bitcoin and as an asset that was appropriate for people's retirement accounts in the US and how that all came together?
Yeah, absolutely. I think the biggest thing was that when you look at the two together is you're talking about retirement and then you're talking about crypto. And from early on back in 2015, 16, people thought we were kind of crazy. Yeah. And we had a few folks that would listen to us, and they saw that we were trying to build this in a model that was similar to other asset classes. Okay, there's a self-directed client that wants to invest in a particular asset. And that's kind of our job, is to help facilitate that. And once we got that going, it kind of really grew into a bigger beast, because we went through the second halving in 2017 and into 18, and the run that happened there. And then we went through another one in 2020 to 21 and another run that happened there. So we keep learning these lessons of experience via halvings. And along the whole way, I remember the early 17s when the first concept of a ETF was being brought up. And then I was on I-24 News and CNBC talking about the futures ETFs that launched about, I think it was like maybe late December, early January of that time period. And so all of this kind of came together to understand that this is an asset class that demands a different attention scale. It demands more security. It demands a better custodial solution. It demands a lot of things. And that's what you see happening in this next evolution of the space, is that the realization of the fortitude of the asset class is important. And the ETFs are the first thing that are happening this year. And you mentioned it, the next and fourth halving is happening in April of this year. Are you prepared for that yet, Andy?
Well, I certainly take an interest in it. It's fascinating how, the halving narrative or the 4-year cycle, whatever you want to call it. It's fascinating the way it has played out in the past. Of course, people, no guarantee it stays the same into the future, and perhaps we get, diminishing returns, but it's just, it's math, right, Chris? There's no getting around the fact that the daily issuance of Bitcoin will be cut in half in April, and it's just people, for whatever reason, the human mind, it struggles to kind of comprehend
scarcity
and exponential growth, and how these things factor into a money supply. It's very new to people, right?
Yeah, the last time that scarcity was realized in the United States was my great grandfather was born in 1912 and fought in Okinawa. And he lived through the Depression. He was probably the last person of my ancestry that lived through scarcity, where they had bread lines, and they had a executive order that confiscated gold, for example. And so all these things were around solving the Great Depression, which was driven via a high amount of supply, a high amount of demand, no supply, and hyperinflation and other things involved. And we're about 120 years later. History doesn't, what did Mark Twain say? History doesn't seem to pattern itself, but it certainly seems to rhyme.
Yes. History doesn't repeat, but sometimes it rhymes.
Yes.
Something like that.
Yes, sometimes it rhymes, something along those lines. And so that's kind of what's happening right now, is we're reaching a new level of, let's think about how much money has been printed just in the United States alone for the last 20 years. And it keeps just exponentially growing. I was graduating college when the houses were burned, as I call them, because the mortgage crisis fell out. And how much, back then it was like $1 billion was a lot of money. And now we're doing $1 trillion stimulus and $1 trillion layouts to other components of the budget. And this has a day of reckoning, don't you think?
Well, yeah, you'd have to think so. And I think it's just a matter of, as more and more people around the world, begin to adopt Bitcoin in one way or another. And that's another way you can look at, Bitcoin's growth over time. Obviously, the 4-year halving cycle is one. Another is kind of just the growth of the network, as more wallets are made and more people start to put a little Bitcoin away, whether they're, in a self-custodial account or an ETF or with you guys. It just means that eventually I think something has to give with, combine more and more money coming into Bitcoin and less Bitcoin available. Eventually there's a supply shock, surely.
Yep, exactly. And when you're cutting down that anti-inflationary component where it was worth a Bitcoin and then a half and then a quarter and then beyond and beyond and beyond, it's going to keep getting closer and closer to zero. And that drives something that's different than pretty much every other economy in the world today.
Absolutely. Look, well, let's bring it back to, Bitcoin IRA, what you guys do, Chris. Mm-hmm. So you said, you've been going for some years now, 2015, was it? And yep. So you talked about how in those days, there would have been I think you said it yourself, people thought you were crazy. So how did you get through those early days? And I suppose who were the early customers or your clients or the people that were willing really to put some skin in the game in those early days. I'm sure they've done very well, but it would have been a ballsy move, if I can say it like that.
Back then, for sure. I would say that the big thing was we asked for forgiveness, not permission, as we built it. And there's a lot of people that are probably listening today going, yeah, you're welcome, I forgave you. But when it came to the clients, it was about, I call them the engine nerds. So these are the guys that were working at Intel. They were working at NASA. Number 11, Roy, he's been at NASA. Now he's at Blue Origin and a couple other places. These are guys that are thinking future-minded about technology, and they've been doing it for decades. And when crypto came up, they just understood it. They saw that this is the next evolution of probably money and monetary systems, and they got in early. And some have done very well, obviously, and some have done decently well. It just depends on where you get in. One of the things we always kind of tout is the beauty of our platform is we can allow you a dollar cost averaging system. And what that allows you to do is you can put your funds from a contribution, a rollover, or a transfer, and then you dictate when you want to get into XYZ asset. And I remember hearing earlier that you were talking about the difference between like Bitcoin maximalist and ETH maximalist on a couple of podcasts ago. And that gives you the ability to play either of those sides or both those sides. Does that make sense?
It does. Well, and I suppose on that note, what you're saying, Chris, is you do offer other crypto assets as opposed to Bitcoin only. Is that right?
Yeah, we have up to, I think, 65 right now.
Yep. And look, I'm curious, what's the if you can share it just roughly, what's the kind of, I don't know, the allocation to Bitcoin versus everything else? I assume people are still heavily weighted to Bitcoin.
Yes, because Bitcoin was our first asset back in 2015. And then in 17, we launched Ethereum in April. And since then, it's been a series of sporadic versions of other coins that come in. So I'd say about 50% of our portfolio right now is both of those assets, with a heavy side being Bitcoin. And for different reasons, right? So Bitcoin is the first cryptocurrency. It's got an allure of a supply fix. It's got the allure of halving. It's got the allure of all the things that it has around it. Ethereum, in fact, has a different allure. It's about building a backbone to the future. If you could buy shares of the internet in 1990, would you have done that, Andy?
Yes, it would.
And so that's kind of what Ethereum might represent. I'm not saying it's going to represent that, but if you see where all the development is headed, it's not headed onto Web 2.0. It's headed onto Web 3, 4, and 5.0. And people are building new applications that are going to do different things in different fashions. And they're going to be built on a backbone. And that backbone is likely going to be Ethereum or one of the derivatives of Ethereum. Ethereum's been around the longest, and most of their chains are tied to it for either distribution or liquidation. So you have this kind of asset class sitting here that's, we'll see, 1990, I was 5 years old. I guess I wasn't thinking about buying shares of the internet, right?
Totally.
But I'm now 38, and I'm thinking, you know what? If this is the next internet, I'd like to get a little piece of it.
Yeah, and I think it's also why people such as yourself, Chris, have it's almost kind of visionary to think, and back in 2015, that crypto assets are it's not just speculation. It's not just about trying to day trade. It's actually part of a well-constructed retirement portfolio. And I suppose in that case, you've got to be thinking in terms of decades, which really is long-term thinking. And sure, it doesn't mean that something could go wrong with Bitcoin or Ethereum or with any of these other assets, and your investment could go to zero. But if Bitcoin or Ethereum does do what we think it does and becomes the next third, fourth, fifth generation of the internet, then if those investors who are smart enough just to sit and wait and let that thesis play out, those are the investors that really will be rewarded, and they'll be well comfortably looked after in their retirement, I imagine, Chris.
Yes, absolutely. And you're talking about decades. I call them hodlers. I'm one of them.
Yes.
Buying Bitcoin and holding it for a long period of time, or Ethereum, or whatever your asset class might be. With the IRAs, what you get is you get a tax advantage consideration. So if you're in a traditional IRA where you say contribute $5,000 and you lower your taxable income by $5,000 that year, you're going to pull that money out a long time from now, and it may roll up to from 5,000 to 50,000, 500,000. And once you pull that out, you're going to be pulling it out at 59 and a half, 60, maybe 70 years old. And your income tax bracket's going to be lower because you're not going to be making as much money. If you do it with a Roth IRA, which I find to be very popular amongst our users, you're going to not take that advantage on the front side. So you're not going to get that benefit of lowering your tax income by $5,000. But you're going to be able to take that money out tax-free at any point in time after 59 and a half. And there's some occasions where you can take it out early for higher education expenses, for first-time home buying expenses. So these are all the elements you can play, and there's SEPs, there's 401ks, solo 401ks. If anybody in your audience has a question about, and they're American, they have a question about how do I manage my retirement to get some crypto? We've got a group of people that have been working with me for about 11 years that will answer all these questions. And they're just a phone call away. I think you're going to put up a phone number and a link, right, Andy?
Yes, indeed. So in the show notes, we will have both the phone number and the link. You just give me those links. They'll be in the show notes. They're there now, listeners.
Wonderful. And so what they're going to do is they're going to find a way to, I mean, we have clients that started with 5,000 and are at 5 million. That's just the reality. It happens. And if you're doing that in the Roth or a traditional setting, you don't have to pay the capital gains implications of taxes that you would normally have to do if you were not in an IRA setting. I did this presentation in Puerto Rico in 2017, and then I did it again in Vegas in 2020. And I call it the $35 million mistake, because if you did the same amount of money in X and Y, retirement, non-retirement, by the end of it, if you had like total hindsight, you would be able to say, I made this much money. And we calculated the cost differential, and then we took a look at the tax differential, and it was $35 million difference for that person. And that's a big chunk of money that you could be tucked away in a long-term investment. Like you said, these are the hodlers. These are the folks that are looking at it for decades, right?
Yeah, that's right. And look, Chris, obviously listeners probably know that I'm not American myself, and I'm not based in the US, but because this is a crypto podcast and just the way that, the audience works, the predominant, most of the listeners to the crypto conversation are in the US. So they will probably know more about the distinctions between a 401k, a Roth IRA, and a traditional IRA. But you, of course, Chris, will know even more than the listeners. So you've alluded to some of those differences, but just anything else in terms of the kind of the different advantages, whether it's tax or otherwise, holding patterns, the ability to access crypto, as you said, for things like a house purchase or study or something like that. For the people listening, what is the best way for them to kind of think about this, particularly when there maybe a lot of people will be a little bit younger, so they have time on their side, and not only time, Chris, but they have another advantage in that if they're listening to this, they understand the long-term thesis for crypto probably as well.
Yep. Agreed. And they tie together, right? I think that for the folks that aren't the youngsters, in which we have that, I was on CNBC Power Lunch last year, and it was about 76% of our clients were born before 1976. Well, I was born in 1985, so I'm pretty sure I'm on the younger side of this whole generation that's involved in the IRA sense of it. I think what you could see is that you could build something slowly. You could do $1,000, $2,000, $3,000. There are limits that you can do on a contribution to an IRA. Our platform allows you to easily link and then fund from a bank account at any time, whenever you want, whether it's the first contribution. Right now, up until April 15th, you could do last year's contributions, this year's contributions. So I think what you need to look for is a good fintech company that's looking for your best case scenario, finding the best tax savings that you can have, and security. That's the thing I cannot impose more on anybody is security. So wherever you buy your crypto, and there's probably plenty of people on your channel, American and not American, use 2FA, use 3FA is what I call it, where you're doing an extra layer, taking things off your phone, maybe taking things into a static or non-dynamic IP address with like a direct line of internet. Crypto is a target and you have to be more secure. And that's something we focused on 11 years ago when we built the first crypto IRA, was just understanding that we have a responsibility for security. And that means understanding that the person is their weakest link. So it's not commonly that a trust company, and that does happen where trust companies get hacked, but it's more often where the person gets compromised, where their email or their phone number or SIM swap happens, and then they lose crypto. So we built around those things, and I would encourage folks to sit down with one of our VPs or one of our experts that have been here for 7 or 8 years, just to sit down and talk about what our program really puts to the table. That would be probably a good starting point. And wherever they're going, whether it's IRA, non-IRA, they could find the solution that makes most sense for them. Does that make sense, Andy?
It does. And look, I mean, yeah, the security point is well taken, Chris. And I think you talked about 2FA and 3FA. It reminds me, even the I don't know if you saw that the SEC itself, their Twitter account was compromised because they had 2FA turned off.
Yeah, they kind of announced an approval early, right? Is that what happened?
That's exactly what happened. Yes. So it just goes to show it can happen to anyone, but if
anyone, anywhere, at any time is kind of our policy.
Yeah. What and look, speaking of the SEC, obviously, finally, reluctantly, you'd have to say they approved, 8 or 9 or 10 or whatever it was, Bitcoin spot ETFs. What's your kind of thinking on that, Chris? I mean, I'm sure on one hand, it's kind of a validation, I suppose, of the thesis that you've had for, 8 years or so now. What's it like seeing, the traditional finance kind of now turning around and saying, well, maybe everyday American investors should be able to easily invest in Bitcoin?
Yeah, I mean, I kind of love that the guys that bashed it were the first ones in line to get it. But beyond that, what you have is you have a mainstream adoption tool. So for somebody that wants to click, and buy crypto with their Fidelity IRA or 401k, it's possible. There are some differences. One of the first ones is that this is not a direct investment into crypto. So you're going to kind of get a proxy certificate and you're going to get a kind of an IOU. What that means, we don't know yet because it's brand new. What we do is if you have a Bitcoin in your retirement account and say you reach that age of 70 or 59 and a half, if you want to take it out, we can send it directly to your wallet as a Bitcoin. That's not what these ETFs are built for. They're built for stock trading, short-term trading, maybe volatility trading, maybe some short-term day trading. All kinds of things are going to grow from this, but they're not built for that long-term hold that we were talking about earlier. And then beyond that, it is a matter of the timetable. Remember, stocks work from 9 a.m. on Monday morning till 5 p.m. on Friday evening, right?
Yeah.
Well, in the world of crypto, it's 24/7, which is kind of like your and my world, right? Because you're in London and other people are here in XYZ. And so we have the whole calendar covered. With stocks, with ETF, you're going to be limited to the 9 to 5 mentality. With crypto, it has no 9 to 5 mentality. It is always moving in different directions during weekends. I mean, heck, this weekend it went from almost under 40, I think on Friday, to about $43,000 today in crypto.
Yes.
I think that's kind of an important thing to look at as far as how you invest in crypto is, do you want the real thing or a proxy certificate?
Yeah, that is a great point. All right. Well, look, as we finish up this part of the podcast, Chris, for people, Americans that are listening and thinking, well, this Bitcoin IRA, it sounds like a sensible, secure way to invest in crypto assets for your retirement, get in early and just let the market do its thing over years, even over decades. That's how you really can compound those gains. Yeah, what should people do, Chris? Where should they go? I mean, obviously links will be in the show notes, but you can just explain, kind of talk us through a bit of the process and where people can start out as well.
Absolutely. If you go to bitcoinira.com on your web app or your mobile app, it'll take you to the process for an application to open an account. We have a team dedicated to helping you open, fund, and then thereby trade your account. After that, it's up to you. You're self-directed. You're in charge. You go back to the same domain. One of the things we learned early on was that there is an immediate demand from our crypto investors. They're not looking to do this in 2 months or 3 months. They're looking to do this in 2 hours or 3 hours. And we built that system around that. We've also got coming out in the second quarter, we've got robo advisory trading. We got limit orders and conditional trade orders. And we've got coffee talk trades, which is pretty cool. So I can't wait to show you all those things as clients.
Fantastic. Thank you, Chris. All right. Well, I reckon what we do is we go to a very quick break and then we'll come back. We'll have some fun. We'll run you through the very famous crypto conversation hot take round. Back in 1 second.
Hey, what are you still doing up?
I've just spent my entire Friday night researching Bitcoin charts, crypto glossaries. My brain feels like it's going to explode.
Why don't you just use BitGet? It's going to save you at least 10,000 hours trying to learn it yourself. It's an online crypto exchange. You can copy successful real-life traders having their expertise to make smarter trades.
Really?
Yes, really. Don't miss out. Get on it now. And by the time you're done, Bitcoin will be worth about $100,000.
I just got my cat to help me do the research.
Hands off, gains up. Start copy trading on BitGet.
All right, we are back and I'm with Chris Kline. Chris is the co-founder and chief operating officer at Bitcoin IRA. As we've learned, an IRA platform helping Americans invest in crypto with self-directed IRAs. Chris, I'm not sure if you're aware, but you probably are actually. I like to finish each podcast with a quick round of rapid fire crypto conversation hot takes. Are you up for it?
I heard about that. I'm excited.
Excellent. I'm excited too, Chris. Just going to run some questions at you. Just want your kind of honest answers, hot take style, if you like. Question 1 for you, Chris. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
Oof. I think I have a right or obligation is better to sit right in the middle, because there are great arguments for the purity and beauty of Bitcoin, but there is also the same amount of arguments for the expansion of the industry through altcoins. So I think I sit right in the middle, and I would like to see people have mostly a diversified portfolio in crypto along most of them.
Yeah. Very, very good. All right, makes sense to me. What would you say then, Chris, is your firmest conviction, crypto opinion?
Having.
I like it. All right, well, just on that, a hot take. Next Bitcoin halving happens in April. So, just 2 or 3 months to go. What do you think happens post the halving this time around?
Well, kind of like the ETF, I predicted that it would go down, and it did. I was on Crypto Professor, and he was like, well, what's going to happen when the ETF launches? I was like, probably crypto's going to go down, because that's what crypto does. It's typical crypto. So with this halving, there will be a moment of lull, and that's what always catches people. They're like, oh, the halving didn't mean anything, and this is why it went down. And then 6 months later, 6 to 8 months later is probably the safe bet. Things just go crazy. That's my prediction.
Yeah, I like it. And I think that makes sense. It's that typical kind of, buy the rumor, sell the news cycle. Saw it in the lead up to the ETF price. It had a great run up in the lead up to the ETF. And then, of course, sold off reasonably brutally as people took profits and people, sold the news.
It wasn't just people. FTX was taking profits.
Absolutely.
Well, not profits, but they were selling off to pay off investors. And it was interesting to me that there was, I think the price of the Bitcoin that they were being paid out was like 11 or 12,000, and now it's 40,000.
Yeah.
It was like a way that everything worked together to make off the payoff, right?
Yeah. Anyway, generally, I agree. I think something similar will happen. As we get closer to the halving, we'll probably see some froth and some excitement in the market. Mm-hmm. The sentiment will get frothy. We'll have the halving. People will look around. Nothing's happened. It will probably sell off again. And then the real excitement begins later in the year.
Yep.
All right. Look, Chris, Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. As you know, 10 years in blockchain is a long time. Anything you like here, kind of crypto retirement accounts or Bitcoin itself, what does it all look like in 10 years' time?
Wow. In 10 years, I would say that you're going to start seeing the tokenization of other assets that we're used to. So whether it's giant office buildings or houses or land development or oil rights, there's so many things that could be put together into a crypto consortium that can be tokenized and made a fair and reasonable tradable asset beyond just the first market, which is the people that are buying and selling those assets, right? The second market is the liquidity market, and the third market is the retail market. So if you can take it all the way there on a lot of things, people will be thrilled. And it may help neutralize the economy of this world today. So that's what I'm betting on. I'm betting on the realization of tokenization.
I love it. All right. Flip side of this is a quote by William Gibson, who famously said, Chris, that the future is already here. It's just not evenly distributed. Can you think of an example of the future being here right now, but most people aren't aware of it?
Easy. Crypto. No, beyond that, I see it. I see it oftentimes with my friends and family of media. So there is a future of media that's happening right now that is a different media than any of us grew up with. And it has a different control factor and has a different impact on society. And that's a part that we haven't fully adjusted to. And we might be another 4 or 8 years before we figure out what this media looks like.
Yep, I think that is exactly right. The world is changing faster than we thought. As we start to finish off, Chris, just curious if any metrics that you're prepared to share, even just in a general sense of, I suppose, like customer acquisition or, total investment funds coming in just from, kind of 2015 and the, 8 or 9 or so years since, how is that journey? Has it started as a trickle? And, I'm sure there've been ups and downs. What does it look like?
Yes, absolutely. I think one of the big things for me was watching it go from, we would put out a press release and like 5 or 10 people would care about it, to where we would put out a press release and 250,000 people would read the press release. And that was like the first run. So if you take that and then you add an exponent to it and an exponent to it and an exponent to it, you're going to see what the next runs could look like. But you're absolutely right. It's a love-hate relationship with crypto, right? And what we have to do is, as crypto folks, always manage our ability to get there. It is hard to run a business in the crypto industry. Everybody in crypto that's legit will tell you that same thing. But right now, what you're seeing, I think where we're going to get to is that the survivors are going to kind of collaborate together and build out the next generation of this business.
I like it. Couldn't agree more. All right. Well, thank you, Chris. The final question for you, of course, is what is your favorite science fiction book, film, or TV show?
Ooh. I love 1984 by George Orwell. I love that one. I don't know why I love that one. But I'm also like a Stargate kind of fan.
Yep.
And I'm also what is that one that has Sheldon? The Big Bang Theory.
Oh, okay. Yeah, no, I don't watch The Big Bang Theory, but
Those are all American ones, but those are kind of the ones that I kind of live with.
yeah.
I think it's just being a little nerdy from time to time is fun.
Yep. Yeah, 1984, of course. Yeah, classic piece of dystopian sci-fi. Big Brother is always watching, and yeah, I mean that if and I suppose crypto is at its heart potentially a tool to fight back at the nation state being too totalitarian and having too much control over, well, in our case, I guess the money supply, but everything else in 1984, right?
Yeah, I saw somebody post, a friend sent me a person that makes $500,000 a year and they feel average. And then I broke it down and I saw what they did there with their budget. But then I also saw the comments, and most of the comments were, how is it possible that they're paying 45% taxes?
Yeah.
Because most of the people in the Orwellian public don't understand that the effect of the Big Brother, right? And what it does. And that's kind of just another cut of it. If you're making $500,000 and you're paying $250,000, that's kind of a little crazy, right, Andy?
It's a little bit crazy. Because are you really making $500,000 if you're not taking it home?
I don't think so.
Yeah. Anyway, look, this has been fun, Chris. It's been a pleasure talking to you today. And just to finish off, again, shout out the Bitcoin IRA websites, social media profiles, any of your own personal profiles, wherever else you like to hang out online. But again, yeah, what should people do to engage with your products and services?
Well, first is go to bitcoinira.com and take a look. And if you're interested, sign up, and then you get to talk to an expert. Beyond that, I'm on LinkedIn as Chris Kline. I am on, that's pretty much the one that I'm pretty public with. So let's go to LinkedIn and we'll meet there. Add me and I will add you. And if you have any questions, we'll take care of you.
Awesome. Sounds great. Thank you so much, Chris. All the best and bye for now.
Thanks.
All right, there you go. That was Chris Kline from Bitcoin IRA. Yeah, it was fun. Pleasure talking to Chris. And man, I mean, as I said, the kind of the appetite for risk and well, I said it, yeah, the ballsiness to go into that kind of IRA world with Bitcoin as an investable retirement asset back in 2015. That is obviously a very smart move, but yeah, with the benefit of hindsight, of course. But yeah, that would have been a risky move to make. So full credit to Chris and his team for pulling that off, staying the course, and yeah, being early. And now, of course, the rest of the world is waking up to similar ideas. But yeah, got to shout out the pioneers. So well done to the team at Bitcoin IRA. If you want to investigate their services, particularly in the US, well, links, of course, are in the show notes. Yeah, well, thank you, team. We reached the end of another podcast. Yeah, look, as Chris said, good to see Bitcoin stage a little mini recovery, just kind of, I guess, over the weekend and yesterday, now back up to 43,000 after, a bit of a dump following the ETFs. But yeah, I think as Chris and I talked, it's just going to be a little bit kind of up and down to the halving, and then we'll see what happens. But yeah, I think quietly confident is one way of thinking. We're still in January, so there's a lot of action to come this year. We'll see what happens, folks. In the meantime, stay subscribed to the Crypto Conversation in whatever podcast app you are using. And it's bye for now. This was the Crypto Conversation for Brand New Coin.